Hello, everyone, and a really warm welcome. Thank you so much for coming to watch the video today. It's Saturday, February 7th, 2026.
It's great to be here. Yeah, Saturday is a good day to, step back and really digest this stuff without all the market noise.
Exactly. And today we're really focusing on, I guess you'd call it, the industrial heartbeat of the economy. We are breaking down Rockwell Automation's first quarter fiscal 2026 earnings call.
It just happened a couple days ago, February 5th.
Right. And if you want to know if factories are getting built, if companies are upgrading their equipment, this is really the company to watch.
There's such a bellwether. We've gone through the whole transcript, the slides, and of course the Q&A to see what the CEO, Blake Moretz, and CFO, Christian Rothes, had to say.
And head of investor relations, Ajana Zellner, was on there too.
That's right.
So let's just get right into it. We're going to start with a summary of their prepared remarks, the story they wanted to tell the market. Then we'll switch gears and dig into the Q&A.
Which is where the analysts, try to poke some holes in that story. And, the story they wanted to tell is actually pretty strong. Rockwell came into the year with a clear goal, boost sales and expand margins. And if you just look at the headlines, they pretty much nailed it.
They certainly did. Let's look at the scoreboard for a second. Sales, margins, and earnings all came in ahead of what people were expecting.
Right. Reported sales were up 12% year over year. That's a solid double-digit number.
And the adjusted EPS
came in at $2.75.
Wow.
That was a really significant beat. And their total company segment margin was very healthy, 20.7%.
Those are definitely strong numbers. But where it gets interesting is when you look under the hood,
yeah,
it wasn't like a win everywhere. It was very specific. So let's break down the segments.
Yeah, let's do it.
First up was Intelligent Devices.
And this segment was the real heavy lifter.
Yeah.
Organic sales up 16%. They specifically called out drives and motion control. So that tells you the physical hardware, the stuff that makes the machines go, is in high demand again.
Then you have software and control.
Even stronger.
Yeah.
Organic sales up 17%. And the big story here was Logix.
Which is basically the brain of the factory, right?
It's the brain. It's the programmable controller. And get this, North American sales for Logix were up over 25%. That's just massive.
Wow. Okay, but then we get to the third segment, Lifecycle Services, and the story changes a bit.
It really does. Music stops. Organic sales there actually declined 6%. Now, management said they expected this.
Right.
These services are the big long-term projects, and customers are just delaying them because of all this uncertainty around trade policy. They don't want to sign a massive check when they don't know what tariffs will look like.
So it's a split story. Companies are buying parts to upgrade what they have, but they're pausing the giant brand new projects.
Exactly.
But, even with that hesitation, they did announce some pretty interesting customer wins.
Yeah, they dropped some big names. RH Shepherd, for one, they're a big commercial vehicle supplier.
And they're using the Plex cloud platform.
Which is a huge deal. It shows heavy industry is finally, trusting the cloud for these critical operations.
And they mentioned a big win in India, a cybersecurity one.
Yeah, with Hindalco Industries. They're a huge aluminum producer. And this is for OT cybersecurity operational technology.
So not protecting email, but protecting the actual machines on the factory floor.
Exactly, protecting them from being hacked. It's a huge growth area as everything gets connected.
They also mentioned some wins involving AMRs.
Right. Autonomous mobile robots. These are the little guys scooting around the factory floor. The wins were with PFM Group and ATS, and it's all about making manufacturing more flexible and fast.
And Thermo Fisher stood out to me.
That's a great one. It's practical AI. Thermo Fisher is using an AI-enabled troubleshooting agent from Rockwell, so instead of a person flipping through a manual, the AI helps diagnose the problem instantly. It's all about uptime.
And one more, a greenfield win in Brazil.
With FS Bioenergia. And greenfield just means building from the ground up. This one is for corn ethanol and carbon capture, so it shows that sustainability projects are still getting funded.
Speaking of building things, they gave an update on their own factories, their Factory of the Future initiative.
Yeah, they announced a new facility in New Berlin, Wisconsin, and they also bought a facility they were leasing in Mequon, Wisconsin. It really shows a commitment to their U.S. manufacturing footprint.
Okay, let's circle back to the financials. The CFO's commentary had some important details that explain that big earnings beat.
It really did. First, gross margins were up because of productivity. They're running leaner, but tariffs had an impact.
I saw that.
Neutral to earnings, but a slight drag on margins, about 30 basis points.
And the tax rate was a big piece of the puzzle, wasn't it?
Oh, A huge piece. It came in way lower than expected, 17% versus the 20% they guided for. And that was mostly because of stock option exercises. So, a good chunk of that earnings beat came from a lower tax bill.
And cash flow, that was one number that was down.
Free cash flow was $170 million, down from last year. But there's a simple reason for it. Incentive compensation.
Bonuses.
Right. Last year, they paid zero in bonuses. This year, those payments came back. So cash went out the door to employees. It actually signals a healthier company, even if the number itself is lower.
Okay, so you take all that. The strong start, the tax benefit, the service lag. How did they update their outlook for the full year?
This is where they got very prudent, as they like to say. They kept their organic sales growth guide exactly the same, 2% to 6%.
No change there.
No change. They did raise their adjusted EPS guidance to a midpoint of $11.80, but that raise is really just them banking the tax benefit they already got in Q1.
So the message is, we had a great quarter, but don't get ahead of yourselves for the rest of the year.
That's it, exactly. The tone was all about being disciplined and execution focus.
Yeah.
They know the environment is shaky, so they're being cautious.
All right, that's a good summary of the prepared remarks. So now let's get to the fun part, the Q&A session.
Let's do it.
First up, we have the analyst Scott Davis from Melius Research.
And Scott went right for the main contradiction. He basically asked, look, your tone is cautious, but S&P data shows companies plan to spend more. What gives?
Are they underspending, or is it all coming later in the year? He also asked about distributors.
Yeah. And the CEO, Blake Morris, he used that word again, prudent.
Yeah.
He said, look, there's optimism, but they haven't seen a broad-based release of orders yet. They're not going by surveys. They're going by actual production data.
And on the distributors?
He was very direct. Stock levels are back to normal. The big destocking of 2024 and 2025, it's over.
Okay, next up was Julian Mitchell from Barclays.
Julian wanted to get into the weeds on margins for Q2. He also asked about the volume cycle for Logix and whether the strength in industries like food and beverage is going to last.
So what did they say about Q2 margins?
The CFO, Christian Rothes, he managed expectations. He said to expect only modest sequential expansion, like tens of basis points, not hundreds.
And why is that?
Merit increases, pay raises for employees hit in Q2, so that's a cost headwind.
And the CEO on Logix.
He jumped in, said Logix demand is really strong, helped by new products. He expects the actual number of units sold to get back to pre-pandemic levels for the full year, which is a big deal. And yes, food and beverage had double-digit growth, and they expect that to continue.
Okay, moving on to Andy Kaplowitz from Citigroup.
Andy pointed out that Q1 incremental margins were huge, over 50%. And he asked if the full-year target of 40% might be too low if Logix stays this hot. He also wanted an update on something called ROK on ROK.
ROK on ROK. What's that?
It stands for Rockwell on Rockwell. It's basically their program for using their own tech in their own factories to get more efficient. The CEO talked about using it in Singapore and Twinsburg. It's about, eating your own dog food.
I see. And what about the semiconductor market?
The CEO said Q1 was just a tough comparison. Right now, semi-spending is all about building out for AI. It's very concentrated. The broader market is still in recovery mode.
Next, we had Chris Snyder from Morgan Stanley.
Chris was trying to figure out the demand trend. He asked if the short-cycle product business is gaining steam while the big projects are still soft.
He was kind of fishing for some hidden upside in the guide, wasn't he?
He totally was. And the CEO confirmed that split product business is strong, big life cycle projects are subdued. But interestingly, he said new factory wins are actually split evenly between products and projects. But bottom line, they need to see orders pick up before they raise that sales guide.
Then Steve Tusa from JP Morgan was up.
Steve wanted a breakdown of that very strong software and control margin, and he also asked again about the cash flow being down despite strong earnings.
And how did they explain that, Tim?
Well, the CFO said the software strength was broad, not just a one-trick pony with Logix. And the CEO added that their recurring revenue, especially from Plex, was growing faster than the average.
And on cash flow.
The CFO just repeated the two key drivers. One, those incentive comp payouts were back. And two, working capital was a small use of cash this year, whereas it was a source of cash last year.
Our next question came from Nigel Coe at Wolfe Research.
Nigel asked about the process markets, so chemicals, oil, and gas. He noted they had strong 10% growth, which seems way better than the guidance. And he also asked if their macro barometer is starting to tick higher.
So what's their read on the macro?
The CEO said process had a good quarter, especially in pipelines and specialty chemicals, but lower oil prices are making the big oil and gas companies cautious. On the macro barometer, he said sentiment is constructive, but they watch industrial production, not just surveys.
They need to see the actual order.
We need to see the orders. Positive sentiment doesn't pay the bills.
Okay, then we had Andrew Buscaglia from BNP Paribas.
Andrew brought up a great point. He noted the irony that Rockwell is killing it in software, while other software companies are struggling because of AI fears. So he asked, is AI a threat or an opportunity?
That's the billion-dollar question, isn't it?
Yeah, it really is. And the CEO was very firm. He said Rockwell uses AI for very specific things. Vision AI, Logix AI, to make workflows better. It's not about generic chatbots. It complements their systems. It doesn't replace them.
He also asked why they're so strong in auto and food and beverage.
Right. And the CEO said those are just traditionally early cycle for them. And he thinks they're winning because their competitors can't offer the whole package. The mobile robots, the fixed automation, and the digital twin software all working together.
And finally, Tommy Mall from Stevens.
Tommy asked specifically about automotive in North America, pointing to some bullish comments from GM. He wanted to know if things are looking up.
And what was the final word from the company on that?
The CEO said it's good to see a positive outlook in auto again. Customers are investing in modernization for EVs and hybrids. But, and here's that theme again, tariffs are still causing hesitation on the really big projects. They need to see that prudent optimism turn into signed orders.
That's a great summary of the Q&A. It really paints a clear picture. So, looking at everything together, the presentation and the Q&A, how would you boil it all down? What are the key themes?
I think there are 4 big takeaways. First, you just have the financial beat. You can't ignore it. It was a strong start to the year, a beat and raise on EPS, even if some of that was tax-driven.
Okay, what's number 2?
Number 2 is the prudent approach. Despite those good numbers, management is keeping the sales guidance flat. They are just waiting for that good feeling out there to turn into actual broad-based orders.
And the third theme would have to be that split we talked about.
Exactly. The product versus project split. Huge demand for hardware and software to upgrade existing lines, but real delays in those massive new lifecycle projects. And finally, number 4 is strategic wins.
Right.
They're getting real traction in that factory of the future, tech AI, cybersecurity, all the autonomous robot stuff.
So the clear message seems to be that the big inventory problem is over, the company is executing well, but the macro picture, especially around tariffs and geopolitics, is just keeping a lid on the outlook.
That is it in a nutshell.
Well, that brings us to the end of our analysis for today. Thank you so much for watching the video.
Yeah, and if you found this summary helpful, please do click that like button and share the video. It really does help us out a lot.
And don't forget to subscribe so you can stay tuned for our upcoming content. We will see you next time. Goodbye.